Good turnaround Tuesday, everybody. How's everyone doing?
Morning, Dale.
Ryan, it's so great to have you back.
Yeah, nice to be back, mate.
Yeah, it's been a little while.
Yeah.
Everything cool?
Everything's very cool. Waking up to see dollar yen above 120. Very cool.
Yeah, amazing. So, yeah, I mean, huge move. I guess, they saved the best for last, so surprised. What surprised me was I certainly didn't think we're going to do this. But, wow.
Yeah. To be honest, this is what I was expecting to happen last year, late last year when we first saw inflation coming up and the Fed turning hawkish. So why it took so long is beyond me, but it's definitely playing catch up now, isn't it?
Yeah. I thought we had peaked there, and you have to respect the way the stock market is handled higher yields.
Yeah.
I mean, especially the NASDAQ, which is, supposed to suffer from them. So showing resiliency that it could take, we've gone up a quarter point in a few days.
Yeah.
So you see the market, you've seen the market from afar, cable acting okay here.
Yeah. I didn't really know why it was dipping in the first place, really, but yeah, it's moving on up again.
So we're at the 50% level EG here. New lows, or do you buy a fib retrace? What do you think? 61.8.
From here, for me, it's all about the 83 to 82.75 zone. That was those 2019, 2020 double bottom lows there.
Okay, yeah, right here.
Yeah, if you zoom out a bit onto maybe a daily.
Yeah, these.
Zoom it out a bit. Yeah. No, where are we? Can you come out a bit further? I think it goes back to maybe go on a daily. Where are we?
I'll go on a weekly.
Go on a weekly. There we go.
All right.
See those 2020 double bottom there. We watched those carefully on the way down, and we hit support there the first time we came down earlier in the year. Then we had the break down over the Ukraine stuff down to 82.
Right.
But what was key for me is on the daily, after we had that breakdown to 82, the next daily candle, the low was 82.75-ish. So it respected that level once again. So I think it's in play again as we get down to 83 here. If we get under there, then we should revisit those lows down to 82s. And I've already started my long-term long build.
Okay. All right. And any view on what's happening with the yen, besides enjoying being long during the blow off? And I also tipped my hat to Blake. He was warning people about trying to sell every little pop.
Yeah.
That
I tried last night. And I got run over. Like it was like I was like picking up a penny in front of a steamroller. But anyway, I can talk about that in a little bit.
Okay, buddy.
Yeah, but I'll let Ryan continue on here. So
I'm sure you weren't the only one.
Yeah.
That tried it yesterday, because I know I did. Okay, so anyway,
there's a few crushed toes this morning, is there?
Yeah. So oil, big break, retrace. I know a lot of people think we're just going to blow to new highs, but this could still end up being some type of failing rally here. Or are we just going to, what do you think?
I think some of the volatilities, come out of that first big move. A lot of that was driven on Ukraine, and are they going to, stop buying oil and all that sort of stuff. But it seems to have settled down a bit, which is hence why we got the move back lower. But then that talks, as far as I can see, that talk's happening again about whether the EU is going to stop buying Russian energy.
You think they will?
I think it's obviously a last resort for them because they need it so much. So until they can actually find other sources, the threats might be a bit hollow, but whether they go that far just to make a point, you never know. So we're in the middle, as you see in that chart. We're in the middle of the high and the low of that volatility period. So the market's saying, okay, what next?
Yeah.
Hello, guys. Morning.
Silver. Go ahead. There's your silver, Stel.
I was just going to say, I bet you the Germans are kicking themselves for shutting down their 6 nuclear reactors. I mean, the timing and the decision making, in my opinion, but the timing could not have been worse. And now they're outlining new plans to use alternative power sources and all that. And it's it's too little, too late now. It's going to take 10-15 years of investment, of billions upon billions of investment to actually get something up and running. And in 10-15 years we're going to have very different set of problems in the world. So and it's funny because the Greens in Germany, they have a lot of power, and they in my opinion, always, people could argue against it, but I think they have exerted power to take decisions which are completely wrong. Completely wrong. And I was reading recently about small scale nuclear reactors and how safe they are, and how their waste is really effectively and efficiently done and reused and all that. And they just turn their back on this when they have the infrastructure there, and they just choose not to use it, which just boggles the mind. But anyway, Germans are Germans.
Speaking about Germany, I don't think they liked their inflation print yesterday. I think was 29.5. There was a 29.5 either.
PPI, you mean?
Yeah.
It was a PPI. Yeah. I mean, it's ridiculous numbers. And as you see energy price remaining high as it has been, look at oil, look at gas. Yes, okay, oil has a 5% plus or minus daily move, but we're at $110. All this, when you start, when all this starts feeding into the economy, which you're going to see it now, everything uses energy to be produced. Full stop. So unless the companies are going to take the hit themselves and go out of business, which I don't think they will, the consumer will have to take higher prices. So, I think
exactly why Powell's pumping 50 basis points.
Yeah,
because as I said last time before this hike, it wasn't about what they did at the last meeting. It's what they're looking at in the future and where inflation is going to be in 3 to 6 months. Because you can get your 6-7% now. It could be 10-15% 3 to 6 months down the line. That's what they're talking about.
So they're really willing to go through all that demand destruction for that. It would take a very severe recession to create enough demand destruction for it to matter. Don't you think?
And what makes you think it won't create supply destruction as well?
And that too, wheat farmers, even though you could get 18 a bushel with their input costs of fertilizer, etc., it's still not worth planting.
Yep. Yeah. I think yesterday's Powell was a pretty big shift, in my opinion. I know people are not making that big a deal of it. I think he's now prepared the market for bigger hikes, faster hikes. So we have to be wary about that. Remember, in the last meeting, I was saying, there's no way he's going to do 50 because he doesn't want to surprise the markets, and they did 25. Well, now it's not going to be a surprise. He was very clear yesterday. So I think the risk is now for them to do 50 or even more. I don't know. They have prepared us now, and I'd said before, you were talking about stocks and how resilient they have been. I said before, look, I think if yields go higher and if we break convincingly 2% in 10-year US, I think my bias will firmly be bearish on stocks. But stocks don't. The market doesn't change from one day to the next. My view changed, but the market doesn't. That's why I said, you have to wait. I think the S&P is 4,600, 4550, 4,600 is probably a nice area, but the market doesn't change overnight. And when the market does wake up to the fact that, there's going to be more hikes coming, quite a few more hikes, and yields are going to go quite a bit higher, then I think equities are going to turn. We're not there yet, but my bias is firmly bearish in bonds and stocks at the moment, but stocks I'm not getting in the way just yet.
I think it depends on whether the economy picks up the slack from, the end of all this easy monetary policy, because at some point the economy's got to stand on its own 2 feet, and either it's going to,
how's it going to do that?
Growing. Well, it's growing at the moment. Okay, the economy is still growing at the moment, and that's going to be supported.
I very much doubt that the economy is growing at the moment. I believe that if you use the real GDP deflator, which is the real inflation rate, which is not what is reported, the economy is already in a recession.
Well, maybe so. You may be 100% right, Steve, but the market trades on what the GDP prints say.
Yes, true. But even if you take that into account, which I agree with what you just said, we at the very least have mixed signals about how the economy is going to progress from now. Now, consider how this economy has been built for almost 15 years to operate on high leverage, to operate on debt. How many zombie companies, roughly 20% of companies in the developed world are zombie companies. They can't even service their debt. If we get even slight servicing cost increases. So how exactly is this economy going to stand on its own 2 feet when basically its feet have been broken for many, many years, and now you even are about to take away the crouches?
Because there's still demand. Because of this supply issues, the demand is still there. And while the demand is still there, be it temporary, if supply chain ease, we're going to get a boost in growth purely because of playing catch up. Now, what happens after that is the big issue. Is rate hikes going to, suddenly, limit growth and send it lower? Because, as you say, higher borrowing costs and higher rates all round, will it crimp growth? And
the thing is that demand is not wealth. It never was, right? Production is wealth. Demand isn't. I mean,
production growth.
Potentially speaking, the willingness to demand is always infinite, right? All of us potentially have infinite needs. I mean, if you could, you would, buy whatever you wanted. So the problem was never, demand. There is demand based on the prices, of course, which now is going to become even an issue, and that's why inflation is going to hurt both ways, right? Because demand is there. Demand in monetary terms is there, right? That, like we see in retail sales. The thing is that people keep on buying what they were buying by going deeper into debt, but they keep getting less for what they're paying. And that's a huge problem, because now anything that has to do with discretionary spending is fast going to go away, because people will have to spend more and more to get the essentials, right?
But that's where the split may be between, like you say, production growth and consumer growth. Consumer growth is likely to take a big hit over the next few months because of increased prices, increased energy costs, all that sort of stuff, higher debt. But I think there's going to be a bit of a lag between production growth. Companies who, ordered stuff 6 months ago and haven't received it, and they've still got customers waiting. There's no point ordering again if you haven't got the first lot. So that sort of demand is still there, but that's probably only a short, sharp.
Most likely.
Pickup, and then we see where we are. But stagflation is definitely creeping in. The worries are growing. We've been saying it for 6-8 months.
In essence, we got official confirmation today. Who was it that said? Windows. ECB's Windows said that we can dismiss the possibility of stagflation. I think that's more or less confirmation that we're getting stagflation, right?
Yeah, exactly. Nice of them to be.
I mean, the moment they start, denying a possibility, that now it's the most likely probability, which we knew already, but now it comes from official lips as well. There's no better way from a central banker to confirm that something is happening until the moment they get to deny it. So
exactly. That's why I bought dollar yen in December 2020, because they all denied inflation was coming.
Yep.
Every one of them.
Yep.
Every single one said no inflation. Oh, thank you very much. Right, I'm gonna call you out on that.
And, also we got something else really funny. I mean, it's really funny. I mean, in my opinion, if you start paying attention to what is being said and written, you get the whole picture. The problem is that the vast majority of people don't even pay attention. We had the finance minister of Germany today saying the following, which, people read it and they think it's normal, but it's actually preposterous, right? He said, we can't rely on the ECB to drive growth as it is fighting inflation.
Yeah, it's not even
Which anyway, I mean,
where do you want to start?
Yeah, where do you want to start? There are two things you need to examine here. First, last time I checked, ECB has always had a single mandate, and that was price stability, right? Yep. So the finance minister of the biggest country in the Eurozone comes out and, thinking it's normal, he says the following, that the ECB is going to have to drop its main mandate, probably, to actually stick to its secondary mandate. And then you realize that, oh, so the first mandate was driving up growth, right? Because that's what the guy is saying, in essence, which I have nowhere to start from. Basically, it's a scam, right? Because you have a central bank that supposedly has a single mandate. Yep. Now the guy comes out and he says that now they will have to care about price stability, which supposedly is their only mandate. And you know he's telling the truth, actually, without realizing how important that is. Because if their main mandate was price stability, why is inflation reaching 6% in the Eurozone at the moment?
Yes, they're still failing it.
So, that's a great point, Steve, and good morning. So I guess my question is to you, how do you make money with that information?
I knew
come on, I know. I mean, this is a trading webinar. I want to know, what do I do right now? Because the euro dollar is breaking highs for the day. Is that the catalyst that drives the euro higher now?
The guy
just, but tell me how to make money.
The guy just said something that isn't even real at the moment, but that shows us intentions. I mean, listen to what he said. They're not going to help anymore driving growth because they're fighting inflation. He didn't say they will fight inflation. And then you look at the ECB and what do you see? Negative nominal rates and quantitative easing. So we know that they're doing absolutely nothing to fight inflation, quite the opposite.
But how about if they do? Is that what the euro's queuing off of?
Yeah,
I mean, again, I'm trying to figure out how to make money with this information.
But what it means is, because all of these people speak with each other, what it means is that he already knows that the ECB has decided that it is forced to reverse policy.
Okay, so that means they're going to raise rates. That means that's why the euro is going higher. That's how we're going to make money, right?
Yes.
Good. All right. So look at the euro. It's actually breaking out right now. Sorry, Dale, I had to take over the charts.
No, that's cool.
Because the euro is breaking higher. Actually, we were just in the chat room. We were just talking about how the dollar actually looks pretty weak. Look at the sterling actually breaking out this morning. Talk about a little bit long-term inverted head and shoulder pattern after coming out of an ascending wedge in a channel that could take us all the way back up to 136. You've got the Aussie dollar that looks relentless. It looks like it's about ready to break highs. The Kiwi dollar is actually breaking out. The Swissy, I tried to play this on the long side and I just basically got out of it for just a few pips. The dollar Canadian looks like it's going to break through. It's closed below the 200-day moving average, below wedge support now. I mean, the dollar looks vulnerable. Minus the yen. I'll say obviously minus the yen because the yen is breaking out. So what do you guys make of this dollar move? I mean, let's talk about, we could talk about, inflationary pressures globally and how the central banks are going to fight it, but the dollar looks vulnerable. Do you sell the dollar here? What do you guys do?
Yes.
If I may say, because I really have to go pick up my son, I think, Blake, that 97.70 is strong support because it was strong resistance, right?
Are you talking about the dollar index?
Yeah. Yes, I'm talking about.
Okay, we got a double top brewing, or we just call this a range, right?
But I think, technically speaking, you can't sell above 97.70. That's what I think.
Okay, so, if we break below 97.70, you got a double top and you got a range. No, you say you can't sell. So you can't sell it here.
You shouldn't. I mean, technically speaking, especially now, you're showing at this chart, we're exactly in the middle of this recent range, right? Exactly in the middle. So,
but if you want to be preemptive,
I get it, but it's not my style.
Yeah. Well,
Steve's
that's
missed
that,
her
and
confirmation.
that's the point of trading, right?
Anyhow, have to go pick up my son. So talk to you later,
Right.
guys.
See you,
Drive
Steve.
safe,
All right.
Steve.
All right.
Perfect.
We've already given you the trade. We already given
What's
you the
that?
trade. We've already given you the trade, Blake. You know, both me and Stel said, you know, the euro is going to be the trade this year, and that's still the case. But it's going to be as with everything, it's a matter of timing. I've started buying long-term euro sterling now because of the central bank divergence. Because as much as we talk about central banks and what they're doing, blah blah blah, the ECB is still easing while inflation is still rising. That's a situation that cannot continue. And it's going to be the same as I said about my trade in 2020. You know, they say one thing and you can see perfectly well it's completely the opposite in the fundamentals. And they say don't fight the central bank, but you can fight a central bank when you see inflation rising to 6% and they're still easing. That's the time you fight it. But how do you do it? You go long term, you scale your trades. You know, I'm happy to buy euro sterling all the way down to 80, maybe even lower.
I'm gonna, I've got some bids out a little bit lower than where we're at. Trying to play this on the long side. I think this is a false breakdown, but I've got suckered into this trade before, back over here where I thought we had a false breakdown over here, and I went long, through this move, and then I ended up like getting out for like a break even somewhere around here, and I'm trying to buy it again. I keep getting sucked into it. It's like it's kind of like that yen. That yen kind of sucks you into it. You're like, oh man, the dollar yen. It's
DSI is 9 or 8.
But it doesn't matter. DSI was 7 yet last week for 3 days in a row. I mean, look, I bought this on a breakout and I played it to the long side. I tried shorting it last night. I put in a quarter size short. And I'm like, man, we were up at 1980, and my average was like at 119.40. I got up this morning, I got stopped out. But I mean, it was small, but it's like, this is a massive breakout. I keep going back and explaining this, even though, I trade around the breakout. I do realize it's a breakout. I mean, the thing, the point that I've been making with all of our traders for the last, week and a half. Go back to 1990. What were you doing in 1990? That's how long ago this breakout, that's how long this chart has been in existence before breaking out. So if you wonder, if like you go back and you think, well, that's quite a bit of time. It is quite a bit of time. I mean, look at the monthly chart. Oh, that's not the one I wanted. But we haven't heard from Kman this morning.
I'm here.
Oh, there he is. Hey, Kman, how are you? Were you just getting muted out by everybody else? There's the monthly chart in the dollar yen. But what do you make of this yen move, man?
121. I showed this morning 121.10 is another level if you take it from 2001. I think this morning I had this vision of the euro dollar when it broke 110, and we were trading 108 the next night from Sunday to Monday, and this dollar yen makes me think a little bit about that. You broke this 117, then no stopping, 118, 119, and now we have this acceleration. We closed in Europe yesterday around 119 and a quarter, and New York wakes up the next day and we're trading 121.
I know. So what point? I mean, like if you're just trying to sell this like every day, I mean, at what point do you stop?
Well, that's another question to ask to me. I mean, I was long, so.
Last night was the first time I tried to fade this move when we were, because it is a big figure number. It's like, okay, well, I'll give it a shot. But man,
how yen works, right? You can do that in any other currency, but yen doesn't really work like that. And you've said it yourself many times. So
right. It's
how
true.
yen works. I do think that there must have been some this acceleration, and actually it happened during the Asian time zone. It points to me like some Japanese corporate having some triggers at 120, losing their protection against a higher dollar, and then needing to go into the market and buy it. Now it's still hanging around there, which is even with the euro correcting, one might have thought, okay, yen may start to correct as well. There's this line just above 121, as I said. I'm actually trying a little short here, but I won't hold it if 121.10.15 breaks. I sold small, very small, 120.88. Yeah, but for the rest, it's a perfect cocktail in yen. If you look at what's happening in the markets, yields everywhere are shooting higher. Not only dollar yields. You look at the antipodians yields; they have been on an absolute tear over the past week. Even sterling yields as well. So all over the place.
So you got yields that are breaking out. Like let me ask you guys this, and this is obviously for Dale, Stelios, Ryan. Not just Kman, but you got commodities that are ripping.
Exactly.
I mean, you got commodities that are absolutely flying, and so I mean that is Kman's mentioned many times on this webinar. That's going to weigh on the yen. I mean, because Japan, aren't they the largest producer of oil and copper and nickel and palladium? And I'm joking.
Everything, yeah.
I'm joking. Yeah, they don't produce anything.
And then you add so you have those high energy prices. That Kuroda says, well, yen is not my problem. That's Suzuki's problem. And Kuroda even said overnight that they will continue to ease and to get inflation back up. But then you can't forget. I mean, look at the stock markets. The stock markets are coming back up, and Stelios already mentioned can't fight it for now, but stocks should be coming off, but they don't, and that's another factor that weighs on the yen, because mechanically when stocks go higher, it's a kind of proxy for a risk on environment, which is also weighing on the yen. So you have like a triple or quadruple cocktail for a lower yen right now. But we're closing in on the fiscal year end, which also will have to do with this. And I don't know whether we are not going to fall into a hole in a week's time or so, all of a sudden the other way. But the calendar will tell.
All right. Well,
Blake,
go ahead, Stelios, please.
Before we hand over to Dale and his guest, we have to mention the Trader Summit event that's coming up, which is very, very exciting.
No, I don't think we should talk about that.
Okay, let's move on then.
We do have what data is coming in here at 4 minutes, 3 minutes.
Well, let's be quick about this.
Canadian
price indices, the industrial price and retail price, raw material.
Let's just understand this is going to be some data that could move the market. So go ahead.
Yeah, so I was just going to say we have the next Trader Summit event, and we have I put the link on the chat box. We have an amazing lineup, our best lineup ever. You have to, I mean, it's really worth registering and attending. This is 8th to 10th April. And we have people like Jim Rickards and Danielle DiMartino Booth, Jack Schwager, Mark Faber, all sorts of amazing speakers. And it's really, really unmissable. So, and it's free. So,
it's over the course of 3 days, and seating is limited. And I say that because that happened last event. We have only so many seats when we buy these licenses because it doesn't. You guys like, oh, you guys put on a free webinar, blah blah blah, but that license costs us a lot of money, right? Still, it's because he prices it all out. And we only have a certain amount of seats, so make sure you guys register. It's going to be an awesome event, and you're only seeing. We still have to confirm. We have. I'm looking at the list right now. 1, 2, 3, 4, 5, 6 others possibly, and there might be a huge debate. But I'm not going to promise anything because we're trying to lock down the final person for a possible debate, which will be epic. Think about like the magnitude of trading, how GameStop was moving, that type of stuff. Anyway, but I'm not going to say anything else. But Stelios, you're right. We need to mention it and make sure you guys register, even if you're not going to be around on that day or like couple of days, so you can get the recordings after you register.
Absolutely.
So
Yeah.
what else did you want to say about that, Stel? Because it's a big event.
No, that was it. I wanted to mention that it's a limited seating. You did that, so it's I really can't wait for that. I really can't wait.
Okay, so some data just came out. Do you guys have a read on what the data was?
Yeah, touch lower. PPI raw materials 29.8% versus 30.5 prior. PPI 16.4 year on year versus 16.9 prior. It's hot. It's marginal difference.
Got it. All right. Thanks, Ryan. And hey, really quick, guys. This is our ForexAnalytix chat room. You can get involved being, inside the ForexAnalytix community. When you try out ForexAnalytix, it's only $1 for 10 days to try it out, and you get the platform and go download the app and everything else. But like just a little bit earlier, I did a poll, just for traders, like, hey, where do you guys think the yen's going to go from here? And we got a lot of great conversations happening. And this is, you guys can see, this is just the general chat room. I'm not taking you into the Flowonomics room, the trades room, the Spanish room, the news and research room. But like, this is how active it is. Just from, I got up at like 3:30 or something this morning, and you can see this is just from this morning. So make sure you guys come in and join the community. It's a great community. It's probably the best private community for traders here, because and we don't allow politics or religion. Yeah. Or that no one can sell anything, because if they do, we kick them out immediately, and it's just people talking about the markets. So come join us. We'll see you guys there. It's only $1 for 10 days. Dale, have a great interview with Adam. He's always great. Okay. I'm sure he's got a lot to say about this move in the yen. So
yeah, he wants to talk euro yen. So
gosh, yeah.
And
by the way, just so you, and then maybe Adam can, he can talk about this, because we're right up against resistance. One of the things that we've been talking here on ForexAnalytix in our community is the inverted head and shoulder pattern finally completed up at mega resistance. And Greg had just jumped in the chat room today saying that we're right at really key resistance here. So the question is, do you chase it higher? But I'll let Adam talk about that. So, all right, guys.
Okay. And you were talking about the chat room, a lot of wisdom in there. So you couldn't, very tough to accumulate so many good people at once unless you're talking to Adam Button. So welcome to you, Adam. How are you?
Hi, Dale. Thanks for the great introduction there.
It's great to have you, buddy. So I know you wanted to, let me put my screen up, cover what's happening in Euro Yen, and Blake just showed it. So sorry.
Yeah, well, I mean, spilling over, right? It's pop, giving the euro a bit of a pop. You're right across the board. Sterling as well. I think this just speaks to the opportunities in FX right now. Gigantic move in yields yesterday. Yeah, FX market pretty much slept on it. I mean, Japan was out for a holiday, maybe that was it. But the classic move on that should be yen weakness. A little bit of it yesterday, and then today the market wakes up, or Japan comes back to work, and the yen gets trounced, and it was just sitting there. It was just low-hanging fruit waiting to be picked. And I mean, we've been watching these moves, everyone has, for a while now, and I think it just speaks to emphasizing the magnitude of these moves in yields, and that nothing's really stopping it. I mean, if you can pull up any rates chart, and there's really, now that we've blown through some of these levels, there's just not anything standing in the way of really 3% there. You've got the 10-year up, and it's the same right across the board. Yesterday in 10s, we blew through the 2021 high, 30s, the 2021 high, and it's a setup really nice. I mean, it's tough to,
it's like a breakaway gap here that we had Monday.
Yeah,
it actually is. I didn't notice that till now. So, it's not just a continuation move. It's a, kind of a breakaway gap. So, yeah, I surprised me, Adam. I'll be, I was thinking that we were putting in some type of peak, but I don't know where the peak would be now. I just saw a flash. Mark Newton thinks yields are peaking, but I guess.
Well, the one thing, I mean, you do start to see some people getting really bearish bonds, which obviously we watch for 30 years right now, and that's in the wrong trade so many times.
Yeah.
But inflation is real. Yeah. And the one thing I do worry about is the calendar, right? This is Japanese year end, right, at the end of the month. And if you go back, I don't know. Yeah, if you have 30s there, you can see. Oh, you just kind of got back off of it. But
okay, you want TLT? All right.
Yeah. That low last year, you see in TLT, the one we just broke yesterday. Look at the date on that.
Okay, March of 21.
Again, that's that sort of year end.
Yeah.
In Japan kind of move. So, I'm thinking about it, but that's really the only caveat I can put on the trade right now. I think the market's coming around to 50 basis points from the Fed. I'm looking at the probability now up to 72%. It was 52 yesterday morning. It came out 65 after Powell spoke. And then we added another 2 basis points today. I don't know if that's what Goldman Sachs is calling for 50. So maybe the market's tuned into that.
So Adam, let me ask you, do you look, have you seen it too? Kman here talks about fiscal year end in Japan, and that, sometimes could put in a seasonal low for the end. And what are we, about a week away from fiscal year end?
That's it.
Have you seen that before, that pattern?
That's it. And I'll pull up some numbers here, sort of while we're talking, and look at the yen in April. I mean, the problem is April is a really strong seasonal month for stocks. So I'd struggle to imagine there's that much strength in the yen at the same time. But, I don't have the numbers right in front of me here. I'm just clicking away to get them up.
So, all right, you brought them up. The $1 trillion question is in the S&Ps, was this enough for an intermediate term low? And will the market have enough juice in the face of higher rates and geo stuff and inflation to make a new high? Or should we be looking for some type of failing rally here in the S&Ps?
Yesterday was impressive, right, Dale?
It was.
And you sort of look for these signs. 3-4 days in a row, 1% gains in the S&P 500. Pretty impressive. And we started out last week with some rough news on China COVID. Oil bounced back here again. And then yesterday, yields moving up 15 basis points, almost 20 basis points.
Yeah.
And, stocks finished flat. And they had kind of, there was a time a few months ago, if you had yields up 15 basis points, you were down 3% in NASDAQ. Easy.
Great point.
And we were able to shake that off. So, again, I'm watching the calendar, but if you remember kind of this time 2 years ago, everybody was watching the calendar as well. And it was just right around 2020, the COVID lows were kind of coming in March, and everyone's saying, well, there's going to be some rebalancing because of, I can't even remember the exact date, but it might have
March
been
30th. 23rd. Again, on the solstice. I mean, the spring equinox, I believe it is. So a lot of stuff happens around there. You brought up this March date everywhere.
It is. It's in that, we looked at last year and the year before. Those are two sort of, it wasn't exactly pivotal in long bonds, but I think there's a trap to looking at the calendar too much and sort of dismissing a move where everything's telling you, this is breaking out. I heard Blake talking before I came on about these moves in yen, breaking patterns back to 1990. There's been a lot of March 30th since 1990. Yeah. And, it all looks pretty good. So, I think you just have to go with these moves. The one thing it sort of defy reason is that Japan isn't having a little bit more inflation. I see the numbers and it's not inflationary, but if you have the yen continuing to weaken, commodity prices continuing to rise, at some point, maybe Japan gets in the game towards hiking, and then you got to look out for that. But I think the trade is just to stay short the yen until then. So long yen crosses until Kuroda comes out or somebody says, listen, we've got to tighten up on policy. And obviously that spark a bit of a reversal, but that's months away. It's barely a risk on the radar right now.
So I really haven't talked to you, Adam, since the war began, and we had this war spike, and you've been, very bullish energy for a long time. So we had this break last week and we're recovering. Do you think we're going to just blow to new highs, or this too, like the S&Ps? We're talking about the same topic. Does crude blow off to new highs, or is this a failing rally here in crude?
I mean, the EU is talking about cutting off its nose despite its face today, cutting off your Russian oil. And I guess what I'm looking at, we're on the contract roll here right now. So it looks like you got the second contract up on that. So that's nice. Just this last leg down, you probably flip to a daily chart. We're right around that 50% retracements, those Fibonacci numbers, sort of on this 30 down to 95 kind of level. I think it comes in around 112, maybe 116 at the 62.8. So
yeah,
we can get up above that 116, then to new highs. I don't like to see these moves going so quickly. I like buying oil at 95. We'd rather to see this move up to 110 unfold over 2 or 3 weeks rather than this really, really quick pop right back.
That makes it kind of has the feel of a bear market rally when it comes back too fast. Is that what you're saying here?
Yeah, exactly. And it kind of stalled right at this 50%. I mean, I think the bigger trend is if you just sort of run it from the bottom, right around that trend line, that 50-day you have on there. That gives a kind of good idea of where the support really is. And buying at 110, you're looking at some pretty good two-way risks right now.
It's a tough call.
On the fundamental side, though, that it's tight. It's tight. Yeah. I've seen these numbers coming out about U.S. production. It's not going to happen. The 13 million barrels a day, and even I think another one was Saudis on the weekend. I think that's why it popped yesterday. So they come out. Saudi Arabia has been saying we have 2 million barrels of excess capacity sitting around, blah blah blah, and they say this forever, but they've never been able to produce more than 10.5 million barrels a day consistently, ever. For more than a few months. And they're at 10.2 right now. And they say they have all this spare capacity. Then they come out on the weekend and say we're going to invest billions of dollars to get to 13 million by 2027.
Yeah.
So now it's going to take you 5 years to get the 2 million barrels that you said you already had. So maybe you don't have any spare capacity here. Maybe 10.5 really is the limit of what you have. And maybe even less because everybody's underinvested.
Maybe they don't want to pump.
Well, that bluff, I think, keeps Americans from investing and the rest of the world from investing because they think, well, listen, if we turn on, I'm not going to go out and spend $5 billion and bring a huge offshore facility online just to have, Saudi Arabia come and flood the market with their 2 million barrels. So, maybe OPEC doesn't have the capacity and we still have about 2 million barrels per day of aviation fuel that hasn't come back. That's going to come back this summer, or if not later. And so and then they're talking about Russia hasn't been able to export 2 million barrels a day. And that's really, will they find markets for that? Will they be able to get it out? So, could we be at $200 a barrel? And I look at oil companies right now because they're still discounting like $70-$80. So I think that's where the torque is in that trade. Why are they doing that? I think it's a long-term problem. ESG killed them.
Okay.
Number two, I think a lot of people thought we were all going to buy Teslas and build a few windmills and we're not going to need oil anymore. And I think, the people in charge of a lot of money right now are all in Microsoft, Apple, Facebook, Google. And they didn't even look at oil. And I don't think there was a lot of critical thought put in. Well, the energy transition is happening. They thought, I want to, go where the ball's going. Go to where the puck is going, as Gretzky said. And so so the ESG headwinds, the belief that oil was going to end. And I think now there's a second hard look at how much energy we're going to need, where we're going to get it from, and what it should be priced at. Because the multiples in those stocks, they're trading at like, 3 or 4 times earnings, a lot of them. And so we're going to need oil for more than 3 or 4 years. And even in a declining demand environment, which I don't think we're into, crude, I think we've talked about before, runs off at about 5% a year. So the mature fields, they just die off at about 5% of global oil a year. So that's about 5 million barrels a year. And you need to reinvest constantly just to keep oil production at that level. And we're just not spending. So I think it'll be a material shortfall in oil for a long time and all commodities. And I think Russia, though, and that's
the
a security
everything
question.
shortage. Yeah.
It's going to change the multiples on a lot of these stocks, and they'll just re-rate on that. And it's good for commodity currencies, right?
Yeah.
I think today's kind of instructive in AUD and the Canadian dollar and the Kiwi dollar. They're really popping. Stock futures not really up much. Commodities.
This looks ready for a breakdown here, Adam. I was thinking, gosh, if Canada can't rally with, and we're not that far off the highs in the dollar, what is wrong, with this picture that it couldn't even pop above 129 and looks like we're going to challenge lows. Do you feel that way?
I do. And I think that conviction is growing here. I mean, $110 oil, a lot of resources. Canadians flush. We ended the mask mandates yesterday here. I think you're going to see Canadian retail sales surprise. Trade balance, Canada is going to be at least a 14-year high this year. And the monthly numbers are coming in very strong, and they'll be stronger going forward with commodities where they are. We talked about lumber before.
Yeah.
There's so many. Steel. I mean, it's not really a Canadian thing, but every commodity out there is really cooking, and I think that investment's going to come, and a lot of it ends up in Canada. And so the one risk is Canadian housing is it's going to pop at some point, but I think you just have to be mindful of that, because I don't know if it's just going to top and flatten out or pop.
Are you selling and going to rent for 2 years and then buy your house back?
I looked at buying a house yesterday. Huh? I looked at a house to buy yesterday, a new one, and it's out of control here.
Yeah, everywhere.
Oh, everywhere, yeah. But
everywhere. I think Grantham says, Grantham, right?
Yes,
he's predicting this big crash, and he's saying, stocks and global real estate is, his bubble pop bonds. So real estate everywhere. People are there's a commercial, a company called Redfin, Adam, and it shows like a real estate office, as people sit at their desks, but they made it look like a trading floor, Redfin. Okay. And there's a tape going across, and there's a woman goes, oh, there's one that just came on the market, and she has a model house, not this, and puts it up on a shelf. And this one lady says, oh, I got to have it. And she goes up to it and wraps her legs around the model house. I said, that's got to be the top.
That's
people, you know what I mean? It's like the QQQ commercials where strange people just pop into a commercial. No, I don't play. I'm an investor in QQQ. So, do you think that what we have happening here in the dollar is a topping pattern as well, or is there one more hurrah left? Dollar didn't really improve with Powell's testimony yesterday.
Yeah, I mean, the problem for me is the euro, and I know it's popping a little bit today. And we talked about euro yen, and maybe that could run, but everything looks so bleak to me in Europe. Okay. If you have an inflation problem, on day one, then on day two in Europe, you have a sovereign debt problem because the budgets are way out of whack. The energy costs in Europe are devastating for industry. Unemployment in the periphery is problematic. The amount of, and you look at European stocks a little bit cheaper, so some of the investment flows go there. But bonds not getting paid that much to be there rather than in the U.S. That spread will grow. The ECB unnecessarily dovish. This war in Ukraine is bad for business, and so that on that side of the dollar, yes, but Aussie, CAD, sterling is kind of interesting, but it's been such a torque trade to the risk trade. It's unbelievable. It's like almost like the old euro yen trade is now cable.
Interesting. And also, so I would say with your viewpoint on the euro that you think this euro pound is going to probably make a new low.
Really, I just can't get behind the euro. I don't know how anyone could maintain the kind of conviction in the euro that you would need to be long for any amount of time.
Okay.
I just can't see the numbers coming in Europe being anything to get excited about.
And we had huge moves in gold both ways, like crude. Tough call there. What do you think?
Listen, if you're not a friendly country with the United States, and there's quite a few of them out there that have a fair amount of money, I don't see how you can still hold money in treasuries or US dollars. I mean, Russia has had how many billions seized, essentially frozen? I don't understand. If China's thinking about invading Taiwan, I don't understand how they can keep as many treasuries as they have.
Yeah, so that was, weaponizing SWIFT has made the whole world want to speed up de-dollarization, don't you think?
Well, that part of the world that's not friendly with the United States, that's for sure. And what would you be buying? I know they're trying to cut off Russian gold, but you can't. It doesn't really work. It's such an easy thing to move and sell. So that to me is, I believe that, these things happen slowly, right? So you're not going to see it in the price action, but I think, we've topped out. It obviously ran into that and made a bit of a double top here. And when we'll see if that holds. I would note, you did note the euro. April is the second best month for the euro in the last 20 years. So
interesting.
Some scope for a little bit more of, and you probably see that read through on the Dixie. Yeah, worst month. April's the worst month for the US dollar. And again, that's probably that risk trade.
It seems like the market likes a weak dollar again. It did okay with a strong dollar, and now it seems to prefer dollar weakness like the old days, risk on with a weak dollar.
The weak dollar. And I think there's a bit of, that point. If you look at the stocks in April, only 4 times in the last 20 years has the S&P 500 been lower. And by far the best month, April and November in the S&P 500 of the last couple decades.
Well, it's sure set up to, if it's, if you believe this formation,
what's your Japanese or Chinese stocks as well? What's your read on sentiment out there right now?
That was a bullish argument for buying stocks down here. I couldn't think it certainly wasn't a Fed put. It wasn't inflation is transitory. It was that no one liked them.
Yeah. That's
I mean, really, it was a sentiment. I mean, it was just a sentiment play. A lot. Yeah, you saw 10 on DSI and S&Ps.
I'm almost finding that's really the best trade out there now is sentiment. I mean, everybody's on Twitter, and you get such a good read on sentiment from so many people. And you get these extremes, and they're almost the strongest signals that are out there. And you can line it up with some of the fundamentals and technicals, but generally the sentiment, you kind of have to go against some of that.
Yeah, and that happened with the dollar too. Dollar peaked, in the 90s, DSI, and still has to make new highs. So you're right. You got to pay attention to sentiment and how people, if they're offside. So I mean, this was such a intense short squeeze that I bet their eyeballs were popping out.
It really. And look at this. It's like a low. The low didn't make new lows there. I read something about 1% rallies in a row.
Yeah,
it teed off a lot of really strong rallies. And then, sorry, just rounding out some of the seasonals. Oil, very strong April through June.
Okay.
So, I mean, oil's got that going for it as well, which is crazy on top of everything else.
Great look ahead on some seasonals.
Yeah, and it's early. I like, we should be a little more early on this season. Sometimes it's better not to wait till the first of the month.
Get people mentally prepped, and then they start, monitoring things and looking for triggers to go with that.
Yeah, waiting for something to go against it. Yeah, dollar, very strong month for the Canadian dollar as well, which I was kind of teeing up on a lot of fronts.
Okay, copper.
I mean, and then I see the risks out there. China COVID it's a real risk, and I'm shocked that it didn't reverberate really more than Monday. China came out and said, we're going to have some stimulus. We're going to ease some curbs on business. And the market loved that. I mean, you saw those moves in China, like what's KWEB up 40% from the bottom?
Yeah.
That's unbelievable.
Moves. Most moves,
I mean, those are
both ways.
This is shockingly large moves, but if you ease curbs to keep business open, I mean, the curbs are there for a reason to keep COVID out. And, with Shanghai, I saw yesterday 24 cases, which is, I think, a record, but also 724 asymptomatic cases. they said.
Uh-huh.
Now, what is that ratio to me seems a little out of whack.
Yeah.
Yeah. I'm no COVID expert, but I mean, there's got to be more than 1 in 14 people who get COVID who have symptoms.
Yeah. And I guess there's a wave happening in Great Britain right now.
Yeah, that's all. I'm not so worried about that because I think the rest of the world's learned to live with it.
Right.
But China will shut it down again. And with these supply chain problems are annoying. And you can't even analyze it, right?
Yeah, you can't. I was wondering if no one's talking about it, but we paid Russia's interest payment to the IMF. Are you worried that there could be a Russian default? Because last time around, it was long-term capital that got caught up in it.
Right.
Do you think that that's looming and kind of like a Damocles sword hanging over the financial markets?
Who I saw there was like Melvin Capital or someone. Somebody who's already been beat up had a position in Russian stocks too. Like it was a pretty good one. Or anyway, BlackRock I think has some stuff there. The companies themselves will have to take write-downs too. I mean, it sounds like they basically nationalized like 800 McDonald's there.
Yeah.
And how do you value those if you're McDonald's right now? And all these other companies that are just walking away, oil companies, anybody who's doing business there has basically got a market to zero.
So if they default on their debt to the IMF, are there
I'm not so, because the Russian debt burden isn't really high.
Okay.
And I'm not really worried about that angle at all. And I think the financial risks, maybe it pops up, maybe I'm wrong about that, but I'm not worrying about it now. I'm ignoring the Russia because they have the money to pay all this. They're just not allowed to.
Yeah.
So that's
and
go ahead.
Go ahead. Yeah.
Coming in today, we're watching the Fed, right? Rising odds of a 50. I think Canada is going to be the first to go on 50. And I think that's April 4th, if I'm not mistaken, is the day, maybe April 15th. Anyway, the next Bank of Canada meeting. That's going to kick it off. And I'm worried about how the market's going to react with all this 50. But, the talk yesterday didn't hit the market too hard. So, and you can get to the argument where you say, you know what, maybe if the Fed does hike sooner, the terminal rate ends up being lower. Because right now you're pricing in something like a 2.25% terminal rate for Fed funds. Similar for, maybe Canada, anyone else who's really hiking, Australia. Is that so bad? Is that so bad for business, for the economy, for housing? We're talking about housing. Well, it's tough in a rising interest rate environment. Well, all those hikes are priced in now.
Yeah.
So
interesting.
Maybe this, I just think it cooks. I'm so bullish on U.S. housing, Dale. And I think the narrative goes against that, but I think those hikes are priced in now. It's 3.5% now for 30-year fixed.
Yeah. Almost 4.
Almost 4. And I'm sure probably go up again next week because these moves, but I think that's
how the world has changed in 3 months. Isn't that amazing? Yeah. It feels like it, we've been in this soup or whatever, this environment for a while, but it's only been 3 months. We would not have had this conversation at the end of last year.
And then on the downside, people talk about recession, right? Commodity induced recession. The things that are going to happen in the developed world are going to be awful a year from now, food crisis, everything else. But for the developed world, that reaction function from governments now, if we start to see a rough patch, will be to spend more money.
Yeah.
And so I don't think you're going to get any sort of meaningful slowdown. Like a slowdown, yes, but an outright recession is almost bullish because you'd get more government spending. Now, I'm not sure Europe has the capacity to do that because of the fiscal rules in the Eurozone, but I don't know, maybe they continue to waive those. And I think that's an important decision coming up. They have to decide on 2023 budget rules soon. And Germany, naturally, is saying we got to go back to the old rules about deficits, the ones that they, fought Italy for how many years. And if they decide to go back to that, you got to get away from Europe, because that's some pretty insane tightening fiscally.
Okay. Yeah, very wide ranging like usual with you today.
But I know I don't know if I made a clear point, but I like
You did.
Pat here. I hate to be to home.
Commodity currencies, man.
Look good today. Look
yeah.
good today.
Really appreciate you coming in and informing us with what to look ahead at. You brought up some April points and bullish for stocks and bearish for the dollar. That's worth its weight in gold at 1927.61.
Well, I like
at least an ounce of gold you dropped here.
I like crypto too. I think crypto's probably set up pretty nicely here now. It's weathered a bit of the storm. So,
and have you had your wife had your third child, buddy?
Fourth, Dale.
Fourth. Oh my, I can't keep up with
thank you very much for remembering. On the first of the month. First of the month.
Congratulations.
So, just getting a solid 10 hours of sleep a night here.
And what a difference from the bachelor in Panama to the father of four.
I remind my wife. I remind my wife sometimes I could be there in that 27th floor overlooking the Pacific Ocean.
You do, huh?
But spring has come. Spring has come to Canada finally.
Well, you know what? They're your best long-term positions you've ever taken. And,
thanks,
so I'm so happy for you, Adam, and really appreciate your giving spirit and always being ready to share your views at a moment's notice for us. And really, thank you, my trading warrior brother.
Also glad to be on. Have a wonderful week.
Okay, Adam Button, and follow him at Forex Live. They do great work there, and if you're not aware of it, his individual Twitter handle is at FX_Button. One of the best news traders and overall jigsaw puzzle traders I know. So again, thank you, Adam, and thank you, everybody. And you could join the team in 14 minutes for the morning edge. Don't just count your pips, count your blessings. Have a great session. Thanks again, Adam.